All right, good evening, guys. Strategy podcast, Tortoise Capital. Oh, wait a minute. We need to do something. There we go. Let's try that. Let's try that again. Good evening, guys. Ken at Tortoise Capital with the Nightly Strategy podcast for September 6, 2020. I'll start off with some charts you guys provided. First one is a frame on Apple. And we want to notice that it's got a nice auto framer of 2.7. It's a 551W, which is good, and it is also the channeling system. So the auto framer simply takes a look at the daily range and then compares it to the 10-day high and says that if we got a mechanical entry at the breakout of the daily high, and then it came up and tested the 10-day high, then that ratio is 2.7 to 1. So that gives you something like 1 to 2.7. The 551W is like a poor man's triple screen in this sense, that you had compared to 5 weeks ago. So if this was today, and you look back 5 weeks, that it's higher than it was 5 weeks ago. So that's a plus. So the first 5 higher than it was 5 weeks ago. So that's a plus. And then if you go back 5 days, you see that there's a sell-off. So it's less than what it was 5 days ago. And that's a plus because that creates the investable opportunity or the tradable opportunity in here. That we've had a pullback from something that was positive over 5 weeks, and then there was a pullback. And then the one is that the open was less than the close, which means that it was a white candle. You know, it would have opened here and then closed higher. So there's that gives it a plus. That we have 1 day of momentum already in. So it was up, had a 5-day pullback on that, and then today was a white candle, which makes us believe that, you know, there could be a momentum play, you know, and then we use the 10-day high as the target. We use the daily range risk as the risk, and then we pick whatever the 10-day high was. Now, that doesn't mean that it was made 5 days ago. It just whatever that 10-day high was, and then we compute that as the reward. So reward divided by risk, and that's always going to give us the same as the auto framer too, by the way. So that the auto framer is a standard way of assessing the reward to risk ratio on any swing trade pattern. And if that number is good enough, then you actually have a tradable pattern just on the basis of trade location, that between the 10-day high and the range risk, you consider that whole relationship, then it's tradable. In addition, the 551 pattern is nice because you have reasons to like it because the long-term trend was good. You have a reason to like it because there was a measured pullback, and now this looks like an opportunity to get back to fair value, especially after 2 days of selling pressure. And then because you've seen a white candle, you're really buying the second day's momentum. So the first mouse has already put in a good day, and they were willing to hold it overnight. And that gives us some evidence of confidence. And then the W in the 551W simply means that Williams percent R is less than minus 50. And that just means that it's that there's enough room still available. If the minus 50 is the zero line, then you're buying it on the correct side of value, that you have more value above the line. So you're buying it on the correct side of fair value. So there's room for it to go. Now, to a certain extent, the auto framer is already going to compute that for us, but I just like having it, and I like to name things with 4 letters. So 551W. It's a relaxed triple screen. So in the triple screen, the strength of the trend the weekly trend had to be better than 20. Then it had to pull back below the 20 period moving average, and it still had to qualify up to the 10-day high. So getting a very strong trend on the weekly and a measured pullback, there are fewer triple screen patterns than there are 551Ws. And because I like this pattern so much, up, pull back, and then evidence of a retracement already happening, that we created the 551W in order to get more opportunities on this basic pattern. Now, the channeling system simply says that if it's in a bull market, and we're going to define that as price greater than the 200-day moving average, we're just going to say that's favorable. And then on a excuse me on an NDX 10, that it's down here in the oversold condition. So which is like less than 20. So if the price has decayed to the point where it is now oversold, then statistically, that's been a good time to buy on dip in a bull market. So we play that trade, like off we go. Now, in the structured channeling system, we back tested that over 10 large ETFs, right? And that's like SPY, the Qs, etc. And has some international funds. So the formal channeling system applies those rules, that it's greater than the 200-day moving average and it's oversold on a 10-day basis. Then and only then you can just buy the open. But we have only tested that on these and published this as the system on the 10 large ETFs. But that thing has had like a historical winning percentage of like anywhere from 0.65 to 0.8, depending on what year that we're looking at. But it's always been two simple rules, high reliability system. So that's why that's always on the home page of my daily report. Well, we like that simple rule set so much that I go ahead and use those two rules on the 30 ETFs, ETF 30 and the Dow 30. And what I do is I use that as a strategy, meaning that I don't just automatically follow the rules on it, but I frame the trade with the auto framer, and then I like to use the mechanical entry. So I like to see it actually performing the retracement. I'd like to see it actually going up before I buy it when I'm using the strategy. If I'm using the system, so the system is just those 10 large ETFs, that system buys them tomorrow at the open just automatically. And that's the difference between the system and the strategy. The system is back tested, has mechanical rules, and no discretion. On the strategy, I'm using the signals as information in order to structure a trade and use standard trade framing. And that's what we have here in Apple. So what I like about it is that the auto framer tells us this is a good deal. 551W tells us it's already had one favorable day of retracement. So you don't get that information from channeling. Channeling doesn't care what yesterday's bar was. So this is an additional piece of information that comes to us from 551W. So when you take a look at the whole package, there's a lot of good reasons to like Apple among all the other choices there are for buying. Should be able to. Daggone it. All right, so let's take a look now at the cleaner chart. So we had that. We had this sell-off that came all the way down and then reversed and closed all the way up. And so this one is showing a mechanical entry here. Now, what I like on this trade frame, and I think this is Catherine, she's willing to frame it right here at the Bollinger Band mean on the downside, meaning she's only going to take that much risk. Like she's not going to buy this here and then let it sell all the way off to 111 to get out. She's going to say, look, if the Bollinger Band mean doesn't act as support, then she's out. Well, with that, that's actually really a good idea because now your reward to risk ratio is better on the way up. I like getting short on a collapse of the Bollinger Band mean. The only concern I have on that one is that it's Apple. And of all the symbols that are out there, that's one of the 2 or 3 strongest that I think people want to buy. So I have a little psychological aversion to shorting it. But if you were going to short it, right there at the Bollinger Band mean is a pretty good one. She would add a position here at Z-1, which is also the long-term fair value. You can see that purple line right there, long-term fair value. So if that collapses, then you can see it coming down to here. The last time the PSAR flipped right here. So that would be 83 to the downside. I'd be pretty surprised if Apple sold off from 123 to 83. I mean, that would be minus 33%. And you can just imagine what the rest of the market would be doing if Apple, the darling of mutual funds everywhere, if that lost 33%, you can imagine what the rest of the market would be doing. But I like the idea on Apple, and then a recovery to 140 that's $16 on 123, and that's about a plus 13% to the upside. So that's a good target in both directions. So that's Apple. And this is Pavel. And DIA. And we're going to see basically the same structure here. He's identified an MMRB of $1, and on a price of 285, that's like 0.3%, right? ATR percentage is 1.44, and on a dollar value ATR of $4. So really, if he's going to manage a $1 and the ATR is $4, he's really coming in at 0.25 ATR on the manageable stop, which I think is reasonable. And so if we saw this and it closed here, again, if we saw it break out above here, above the hump of the dragon, then you'd have a pretty tight stop in here. I'd say probably the bottom of the dragon would be about $1, or maybe the spine of the dragon would be $1. And then you're aiming for a return to normalcy up here at 292. So an entry at about 286 going to 292 would be plus $6, and you're risking $1. You could even have a wider stop and still have, because you got 6-1 there, you could even have a $2 stop, and it would still be 3-1. And I think that's not unreasonable, and especially if you start this off with a hybrid frog intraday, so wherever it opens, you just bracket that with $1, and if it breaks out, you're trailing with that stop, and if it breaks down, then you're short and you're trailing it with $1 stop, and you're in good shape. Now, the PSAR has already flipped. I think you need to check your PSAR, because the RL10 has not yet come down to the to where the PSAR dots would be. So that tells me that your PSAR is going off a price rather than off the RL10. And so our standard has been on our charts off the RL10. Nevertheless, 292 is kind of the peak high. I think that's a reasonable upside target. I think, adding a second position at 289, then it would have cleared the RL10 peak. So that would give you two positions from there, and you're in good shape. So just check the settings on your PSAR, but otherwise that looks good. Here's the trade frame in EWZ. And I especially like EWZ for the swing right now, because you'll notice that it has sold off and then already recovered, and those last 2 days have not been painful at all, whereas the rest of the market was grinding up and then had 2 big down days that closed halfway up the stack. So there's this anomaly of 2 days of sell-off. Well, EWZ, on the other hand, has been selling off, has had a nice recovery for 5 days, and the last 2 days were just like this. Not painful at all when you compare that to what the S&P and the Dow and everything else has done. So if we were to see strength in the S&P, and then if we saw strength in EWZ that was better than the S&P, then we would say the S&P's recovery is contributing to EWZ, but people are also buying EWZ because it's outperforming. And so that would lead you to find the mover and prefer EWZ. It's easier to believe in. And it's still resting at its Bollinger Band mean. So a breakout of the daily range, adding a second position on a break above Z1. Looks like he's got a third position on a break above the dragon hump. So that would be 3. A fourth position at Z2, which is also a breakout above the RL10. and then finally with a target up here at the Z3. That would give you a move from 31.5 to 34.5. That's a 10% move. That feels solid, and you're looking at about $1 of risk using the daily range. But if you use the intraday MMRB, you're only talking about 12 cents. So now, again, just like I showed on DIA, wherever that thing opens, what he's got then is a 12-cent box on either side of the open, and then he plays it either long or short. And then our effort is to try to get that stop. So if it's long, the stop would be here at the open because it moved an MMRB off the bottom. And then you try to get that up to no lose plus dinner for 2 as quickly as you can. And then it's a science project. So good looking frame on EWZ. There's especially good reasons to love this setup, again, because the sell-off created the tradable opportunity to get it back to the previous height. And this move is relatively stronger. It's stronger than SPY over the last couple of days. So it wouldn't take much to continue to believe in EWZ. So good trade for me like that. Here's 2 from Catherine. And so this is DIA, and her total series for the day on this one is 2.64. So that's good. I like this move because you had it moved out from that box and took off. I like the exit. This is where when this rolls over, and now the dragon is rolling over, and the RL30 has rolled over, and the PSAR has flipped, that's where you get short, right there. That's where you get short. Because this little rebound failed to make a new high. So you get short here, your stop is here. Then when what you do is you read that across, and then when you get 3 dots below your entry, so 1, 2, 3, then you bring your stop down to here until the Bollinger Band mean picks up. But in that case, this stop here is the one that gets you out, and now you make a little bit of bank. And so this trade, instead of being a loss, short here and a loss here, is short from here, and you might actually have maybe gotten a better exit in here. By the same token, this is where instead of here, this little breakdown here in the break in the PSAR, when this one rolls over, let me just clean this up so you can see. So you have this high, you basically have this high, that thing is down, then you have this for sure. So that's fine, that's a collapsing dragon. This gives you an even better entry, and now your stop is here, and then right about here, your 3 dots, somewhere in here, your 3 dots below your entry. And then you pick up the Bollinger Band mean, and you get this. You get at least that exit, probably even better than that. But you don't get chased out. You don't get chased out here, and then this one becomes a second entry, and this 2.6R is then probably 5 to 6R. Okay. But I do like the fact that we tried it. Reasonable for this entry. That's a good exit. I would like to see you get in a little quicker, but this is still pretty good. I think this was probably a psychological stop to pay for this loss and this loss, which is fine. Nothing wrong with managing your intraday risk that way. And then I like the reentry. I think you could get sooner, like maybe here instead of here. But this is really the one I want you to get, and then learn the Wu Wei exit, which is here to here, and then Bollinger Band all the way down. Then again, that becomes a second exit or second entry. But pretty good work on that one. This one is also from Catherine. Let's see what we got here. Much like the DIA trade, I like this. I like this entry because you have your risk box here, and everything's moving. So, and EWZ has been one of the stronger candidates. I like the stop here. I think this is where you should be short on the PSAR break. Although I also understand new low of the day. That's not bad. This excursion here gives back a lot, especially after a loss. So you might have played a money management stop in here. This entry here should be here on the RLXD, and that will turn this one into a fractional win. By the same token, when this rolls over, notice all the, a lower low, another lower low, this becomes automatic, and then a fourth lower low. This one should be short. So there's a couple trades in here that will turn that frown upside down. Okay? So when you see that dragon rolling over like that, when it made a higher high, it made a rollover up here, and then it's rolling over at a lower price level like that. As soon as this breaks through the dragon, bang, that's where you get it, and you're short. You don't have to wait for for more confirmation. As soon as that RLXD happens, nail it. Okay, and if you do that, that will improve that score. All right, let's see what we got here. That was all the charts that were posted. I'm going to take a look at some, maybe we'll do a speed run here. All right, so I like Alcoa short here. And as soon as that breaks below here, I'm ready to get short. And then I would add a second one if it breaks below 14. So where would I want to get long on this one? I think not until it breaks above the daily high, and then I think you have a nice trade right there. Oops. Sorry. Yeah, so my yellow zone is nice and tight in there like that. That's where I had the second position. Apple, we've already looked at. You can go to Amazon. Come on now. That's not redrawing my screen. Curses standby. I'm going to put. I'm going to stop the recording right there because there was a lag, and then I missed all of those from when the audio stopped. So I'm going to re-record the speed run.